Hi, I'm Monk and this is the Monk Way. Let's look at my recent purchase of Tesla stocks. How much did I buy, my cost basis, and analyze Tesla as a company right now. I spent a lot of time researching Tesla's recent news, so we will see if Tesla is a good long-term investment, and how much I would be investing in total. Subscribe, hit the bell, and leave a like for more investing videos. I make these every day. And check out my Stock Market Mastery course in the description below, where I teach you everything there is to know about the markets, including over 22 whiteboard animation videos now available on my channel. This is a type of analysis you can learn to do by yourself. 50% off for the first 100 buyers, so don't miss out. Let's start with the stock price. Stay tuned to see my actual buys of the stock. Tesla has been very good for swing trading. In 5 years, if you bought during any of these dips, that's a quick 10 to 20% return every time. If you just bought low and sell high for 5 years on Tesla, you would be pretty rich. They also had great support at the 200-day moving average, the green line. See how I never fall below this line for more than a few days? If you bought here at $150 and sold at $250, that's a quick 66% return. If you bought here at $196 and sold at $350, that's 78% in returns. Obviously this wouldn't last forever. We can see a huge dip of over 40% now, breaking any patterns. This stock is down 26% in the past year, and break even in 5 years. They have no PE ratio, so no full year of profits. Only a few quarters have profits, but overall they only lose money. But a good price to sales ratio of 1.5, good revenue. Compare this to Apple at 3.3. Tesla makes twice as much revenue in comparison to price. They made $21 billion last year, with a $34 billion market cap. This is their one good valuation metric. Keep that in mind. They have a high price to book of 7.3, so not much money in their company. High debts in the debt to equity ratio of 201. That's $12 billion of debt on $4.6 billion of equity, and current ratio of 0.8. They can't pay off what they owe for the year without borrowing more money or selling some assets. This is a very low value, high risk stock at these numbers. They obviously have money issues and can't make profits to fix them. This company could go bankrupt. Let's look at revenue growth over the past 5 years. If you just look at the yearly growth, this is great. 26%, 73%, 67%, and 82%. But looking at the quarterly growth, we see a huge dip in the most recent quarter, 4.54 billion, but still higher than last year's same period, about 35% growth. The most recent earnings might be the problem for this dip. Taking a look at their latest earnings reports, this should tell us any recent issues or good news. They lost $2.90 per share, while expectations were only a loss of 69 cents a share. Huge miss on profits. Revenue was 4.54 billion versus 5.19 billion expected. Big miss on revenue. They lost over 700 million in the last quarter. Deliveries of 63,000 cars, lower than 76,000 expected. They ended up with 2 billion in cash, meaning they spent about 1.5 billion. They are tight on cash. It looks like the business is not doing good in the recent months. Their Model 3 is taking over every other model. Model S and Model X has lost 45% sales year over year, but Model 3 is up 522% from last year. Model 3 was actually 2018's best-selling luxury car in America. This proves Teslas are selling like crazy, even with lower numbers. And they will be updating Model S and Model X, so those cars might go back up. Tesla is expecting 360 to 400,000 cars in 2019. This is an increase of 45 to 65%, huge increases year over year. In 2018, they produced 245,000 cars. Tesla says this wasn't the best quarter, but the next one will be one of the best, stating that people don't like to buy cars during winter, and a tax credit was expired just before this quarter, leading to higher demand in the previous quarter. Logistics were also a problem due to new shipments to China and Europe. Basically, there were some valid excuses for a lower quarter. They still went up 35% year over year in revenue, so I don't see this as terrible news. What is coming up for Tesla? This is very important because we're paying for future growth. This company is growing fast in revenue, but low on actual money. We are paying for speculation and possible huge expansion in the future. Let's see some possible money makers. Self-driving robo-taxis in 2020. Tesla wants its own army of robo-taxis, much like Uber or Lyft. Any Tesla customers can let their cars work for them. This means you could be a Tesla driver without actually driving the car. This is a great stream of income for you, and it works in the same app you use to run your Tesla. Tesla expects a car that costs $38,000 can run 1,000,000 miles and generate $30,000 of profits per year. This means your car lasts 11 years. I can definitely see this being a thing if self-driving cars are coming. The only risk here is regulations of self-driving vehicles. And if the numbers are correct, if this system works better than Uber or Lyft, Tesla will be exploding with profits. Model Y. Tesla announced a compact SUV coming in 2020 called Model Y. Another car means more revenue and profits. We saw Model 3 being the most popular car, taking over Model S and Model X. Now we have Model Y, a bigger car with more space. This will cost around $47,000 to as high as $70,000. There's also a cheaper model starting at $39,000. Production is starting in 2020, so this is coming up later. Elon Musk wants to sell car insurance, which seems like a profitable idea since Tesla has a lot of the driver's data. They can charge the exact amounts of each driver. Important because this means more of an ecosystem. Think of Apple with their hardware and software bundles. Once you buy a Tesla, you have their car, their app, their insurance, and soon you might start using their Uber service. This means a lot more repeat customers in the future. Acquiring Maxwell. Tesla just spent over $200 million to buy out Maxwell. This is a battery company, and without going too technical, basically, Tesla wants better batteries. Now Maxwell has the technology. With the new tech, Tesla batteries can expand in capacity, as much as 20% in the same space. Any new technology helps, so this should pay off in the future. Tesla GIGAFACTORY. Tesla is building a huge factory in China to produce batteries and motors. The building looks like it was almost complete, so production will be ramping up. One of Tesla's biggest issues is slow production of cars, but new factories mean a lot more motors and batteries. Tesla is expecting this factory to produce around 500,000 cars a year. This will take about 4 more years before this can happen, but once it does, we're talking about $40,000 cars being sold to Chinese customers. Just as a comparison, Tesla is only expecting 400,000 cars in 2019, while this factory can produce 500,000 a year. Self-driving technology. Tesla is the leader in this field. No one can know exactly how this works, but here are some claims. They say their new AI chip is 20 times faster than NVIDIA GPU, and they have 100 times more data from 1 million electric cars. Compared to Google's Waymo, Tesla has racked up 1 billion miles, but this is with drivers in the seats, while Waymo only has 10 million miles. Tesla is expecting self-driving cars by 2020. They do seem like the leader in car AI, and with all the data they're gathering, this could be hugely profitable. Now let's move on to the bad news surrounding the company. Bad analyst ratings. We have a few analysts dropping Tesla's price. Citi Research had an analyst lower his price from $238 to $191. Recently, they said it could drop as low as $36. Redbush had a $275 to $230 price reduction. Morgan Stanley actually cut their worst case to $10. They think their current trade war has huge effects on Tesla. China being a big customer has lowered in sales. They also didn't love the recent earnings reports, citing lower sales and revenue. Some analysts aren't liking the robo-taxis or Elon's sci-fi projects. They want more focus on sales of their Model 3 and other cars. Basically a lot of lower price ratings. Let's look at the current ratings on Tesla. We have 8 buys, 7 holds, and 12 analysts saying to sell Tesla, with a high price of $500 and a low of $54, but the average is not bad at $269. The consensus is not good right now. Trade war with China. Tesla has a lot of Chinese customers, as well as a future factory in China. These new tariffs mean cars will cost a lot more if they're coming from America. This means less shipments and less sales. A car that costs $35,000 in America might be $50,000 to $60,000 in China. Even if they're popular, this will lower sales dramatically. Not only that, this trade war is affecting the market in general. Even with good news, Tesla could be dropping along with every other stock. Elon Musk wants Tesla to watch their cash flow. He thinks Tesla could run out of money in 10 months. This means a very close look at every little spending. Parts, salary, travel expenses, and rent, to quote Elon. Tesla has over $2 billion of cash right now. Investors actually helped out with over $2.4 billion, but they still think this won't last much longer. This news definitely worried investors, but it seems like commonplace for Tesla. Obviously this company is not profitable. This means more debts, and more money from investors. Tesla can't really afford lower sales if they want to be sustainable. So what do I think of Tesla right now? Even though they had a bad earnings reports, I see better times coming. The trade war of China will be settled sooner or later, so this will be the long game. The downtrend with bad numbers and bad analyst reports will stop. The revenue is still going up, over 30% year over year, meaning growth isn't a problem even if it's slowing down. Money is the problem, but Elon Musk has proven to always come up on top. Most of the dips in the past 5 years is due to problems with money. They've always solved these problems, so this is a good gamble for me. I think Tesla can bounce back to all-time highs, but it might take a while. A price under 200 is pretty cheap. Right now you're paying for a company that makes so much revenue. A price to sales of 1.5 is very low. Historically, this is the lowest ever, meaning you're getting a huge discount looking at just revenue. If the price to sales goes back to 9 like in 2015, the price should be 6 times what it is now, or over $1,000. Of course it's not that simple. Other factors are affecting the company, such as lack of profits and slowing down sales. So I'm just hoping for 50%. Looking at my brokerage, I have 26 shares of Tesla for a cost basis of $237, for a total of $6,170. I bought in twice, at $3,000 each to lower my basis. As of this video, Tesla dropped pretty hard to $192. We're down 20% right now, but if it goes back to all-time highs at $365, that's a 50% upside. I might buy more to lower my cost basis, but not more than $10,000, meaning I might buy $4,000 more if it drops even harder. I don't think this company is dying, and I see a good future for them. I'm definitely not recommending any of you buy this company. They are high risk, and I wouldn't spend more than 3% of my money on Tesla. If you want to see exactly how I analyze stocks, and learn everything else about the markets, check out Monk's Market Mastery, a complete course on the stock markets. With over 22 animated videos like this one, I spent months of my time on this course. I think it's perfect for the average person who wants to learn, but don't want boring lectures. These animated videos will keep your attention and teach you a lot. It's 50% off for the first 100 buyers. Link in the description or comments below. Subscribe, hit that bell, and leave a like for more investing videos. I make these every day. Keep watching to analyze the best stocks the Monk way.